Neil Slater, you are Global Head of Real Estate and Deputy Head of Private Markets at Aberdeen Standards Investments. Thank you for joining us on BiTV.
Pleasure. It's really fantastic to be here today. So thank you for your time.
Great. What are the main challenges facing investors following a tumultuous year complicated by the COVID-19 pandemic?
Yeah, well, thanks, Luketti. And I think it's, last year was a really highly unusual year. And for me, there's a number of key challenges for investors. I think first and foremost, we're in such a low interest rate environment. We've seen negative interest rates in many parts of the world. And we're seeing that play out, of course, in Europe as well. So from a real estate perspective, that creates issues because you've got to start looking around the globe and working out, just from a basic financial services perspective, where am I investing? So challenging environment with such a low interest rate, but of course that's driving increase in asset prices across equities, perhaps within real estate. So within that type of environment, you start to look at income. But one of the challenging things about last year was, well, we've seen this, if you like, acceleration of the business cycle. We've seen companies that are going into bankruptcy. We've seen rental collection rates coming down slightly across certain sectors. Some worse than others. And so from an investor's perspective, income is also therefore becoming a challenge, despite us being in such a low rate environment. So those are the two main challenges. And the other thing I would note is that two other things, actually. We're seeing, as a result of COVID, an acceleration of a lot of trends that were already impacting the built environment. And this is happening quite quickly. So for investors, it can make us stop and think about, are we making the right investment decisions for the long term, and are we in the right sectors? Are we focusing on the right areas? And finally, bringing all of that together, if you just think it through for a minute, a tumultuous year, historically low interest rate environments, actually some of the widest yields we've ever seen for real estate compared to government bonds. Fascinating. But because of the nature of the virus, kind of switching on and off in different countries, has meant it's a very volatile year for investors. So from an asset allocation perspective, it has been very, very confusing sometimes to make sense of the noise out there in the marketplace.
Yes, because you mentioned long-term. Real estate is a long-term asset class by nature, but given the current uncertainty in regards to the evolution of the pandemic, as you alluded to, how can investors safeguard their portfolios for the future?
Yeah, I think it's a great question because, as you say, at the end of the day, real estate itself is a long-term asset class, but let's not forget that it depends on the type of investor I am. I might be going in for more of a value add play where I'm looking for a quick return on something over maybe a 2 to 5 year period, or I might be thinking very, very long term. For me, what's really important in this market, thinking with a slightly longer term hat, is first and foremost being very clear on the occupiers in the sector and ultimately the geographical area in which you're investing. The occupiers here is key. I mentioned earlier about the business cycle. We're seeing a lot of stress on companies. And what we shouldn't forget is that real estate is ultimately highly correlated to the macroeconomic environment. So if companies are not doing particularly well, if some sectors are struggling, that begins to play out in terms of the income that's paid into real estate. It begins to play out, therefore, with the valuations that we have, within the asset class. Well, there's a word, Luke Etienne, that I like to use called granularity, and that really means having a laser-like focus on the occupiers, on the assets themselves, and on the sector trends that are happening out there. And I think that's so important. In this environment, you've got to be clear on who are the occupiers, how are they financially backed, what's their business plan, are they going to be there in 3 or 5 years? And again, what I was saying earlier about the trend in the business cycle that's being accelerated is playing out. So that's really important. The assets themselves, are you clear about what you're doing with them? Are they really long-term holds? Maybe they have some latent ESG issues that could come and cost you further down the line that you weren't anticipating. And the last thing, the third leg from that granularity of approach, is what's happening within the sector. There's so much technological change, not just the economic change, the significant social change that we're seeing within the built environment. So taking a look at the investment you're making it may look fit for purpose today, but is it fit for purpose in 3-5 years' time, given the changing nature of how we work, how we consume services, how we order things, and how we live as human beings?
Yes. And to that end, what opportunities do you see for real estate investors across Europe going forward?
Yeah, I think this is, I think this is a fascinating question. So, we talk a lot about the mega trends that we're seeing out there that relate to how we live, policy decisions, the macro environment, and the environment itself. From my perspective, I'd just say a couple of things. Let's remember again that we're seeing some of the highest yields between government bonds and real estate since actually the Second World War in many countries. That tells you that there is an opportunity in some areas. For me, what's important is those areas that are impacted by some of the trends we've been talking about. So let's take technology as an example. That will continue, I think, to impact e-commerce. It will continue to impact supply chains. So I think there's a fascinating an ongoing opportunity there for investors, even though you're seeing yields compress, in the, for example, logistics space. I think that's got further to play, and that will play out even more over the next couple of years. Yeah, the other significant trend that we're focusing on is what I would term the living sector. So that could be rental accommodation, it could be by build to rent, it could be aged care homes. We think that there is a need for further capital, further investment to create the right type of environment and stock for people looking to rent in certain cities in Europe that continue to grow, and also as people come into an older part of their lives. What's interesting about that is an asset class, and it's part of the built environment that can create some of that income for long-term investors. So I see both of those is quite important, I think. In addition, we shouldn't lose sight of getting back to basics on the asset class. Assets where there is clearly some long-term income behind it, where the occupier's business plan is clear, and perhaps there's a slightly longer lease because of the nature of the business, or they've put a lot of money into the asset themselves. Those types of long-term income, we will also see having stability of return and perhaps more capital growth, I think, over the medium term because of the low interest rate environment. And then, look at it, if I may just add, the final thing for me, because I do think it's such a fascinating time for the asset class, is let's think futuristically as well. Real estate is all about a built environment matched to ourselves as humans. So do I think it's the end of the office? No. Do I think retail is dead? No. But do I think there'll be opportunities to invest in different ways as we learn from and come out of the COVID experience? Absolutely. So I think those investors that have some flexible capital and that have a very forward-looking mindset will have many opportunities from across the value-add core and core plus space going forward, whether they're building that themselves, whether they're developing it because they can't see it, or whether they're evolving an asset. I think it's going to be an interesting few years for real estate.
Great. Well, Neil Slater, thank you very much for this insight. Thank you all for joining us. See you soon on BiTV.